Hello, this is Leah Grunman with your weekly grain market update for the week of January 30th. Corn futures were up 1 cent for the week. The corn market dug itself further out of the hole in the January WASD, but faced another slight setback at the 20-day moving average, which rejected upward price efforts for the second straight session. Meanwhile, the March board has set higher highs and higher lows in 2 straight sessions as well. Thursday morning's export sales report was decent for corn, with sales for the week down sharply from the previous week's 5-year high, but still a respectable 64.9 million bushels. In the world news, Argentina again lowered corn conditions to 46% good to excellent. This is down another 6 points through the week and down 36% through the month of January. The next 7 days look to continue the most dry pattern for Argentina. The corn affected thus far is the early planted crop, but in February rainfall will be crucial to total production potential as late planted corn begins to pollinate. Soybean futures were down 2 cents for the week. It was positive to see prices hold on a retest of support at the formerly resistant 200-day moving average. March futures have failed for 2 straight sessions at 100-day moving average resistance, which will soon be doubled by the 50-day moving average as well. Thursday morning's export sales report continued the recent trend of improvement for the bean program, with another 30 million bushel of sales and 46.6 million bushels of shipments for the week. Total commitments are 20% behind the same point in early 2025, but that pace continues to inch higher over the past 2 months. USDA is assuming exports will fall 16% year over year as of the January WASD, so that gap is narrowing. In world news, Argentina showed another decline in soybean conditions as well, a down 6 points on the week to 47% good to excellent. About half of the crop is said to be flowering, with 15% filling pods. Harvest continues to get underway in Brazil, with the influx of new crop supplies to the world market bearish argument against U.S. prices. Brazil continues to hold a steady price advantage over U.S. export offers to roughly 50 cents per bushel. Wheat futures are up 5 cents for the week. The wheat market continued to climb on short covering, higher now in 3 straight sessions, with the March Kansas City board again challenging 2-month highs, which if broken would set prices as the highest seen since late June for the most active Kansas City contract. Thursday's export sales report for wheat was another rebound from a sluggish December and early January, with 20.5 million bushels of sales and 13.9 million bushels of shipments. The U.S. program continues to face competitive around the globe, with price advantages seen in both Russia and Argentina, though the softer U.S. dollar over the past week is helping in that regard. Just some things to look at and think about. Reach out to your local grain merchandiser with any thoughts or questions. Hope you had a fun and safe weekend.